Today's video thumbnail picture is of Professor Fate and his sidekick Max Mean. That's Professor Fate, Jack Lemmon, driving the self-propelled balloon, and behind him is Peter Falk as Max Mean, his sidekick. And that's from the great old movie The Great Race with Tony Curtis. And they were constantly trying to blow Tony Curtis up. So I think in this scene they dropped a hand grenade on him or something. So yeah, if they were flying around today, they could get hit with a Sidewinder. Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Wednesday, February 15th, 2023. It's now 5:21 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark, looking back to end of October 2021. I'll zoom into the current area now. The S&P 500 daily chart had the price flip to the combo and sequential sell setup one count. And to negate that for end of day today, on the 15th, there must be a close below 4081.50 for the price flip back to the buy setup count one. And the levels to the downside are in danger of becoming confirmed today, so they're qualified now. Could get the confirmation bar at end of day today for trend factor down 1, trend factor down 2, the disqualified momentum down for 50%, and get below the TDST line, 3949.70, all of the above becomes qualified and confirmed. And with supply and demand lines applied to the chart, you could see that this supply line here, which for today is at 4161.16, and this one up here 4194.91, and today is at 4194.84. They will become qualified with closes above each respective level. And same thing to the downside, there's a new demand line here, which is at approximately 4088.33 for today. And then there's another one under here, which for today is at 4027.71. And then the third one down here, 3959.97 for today. And all of these lines could become qualified today with closes underneath the respective levels here. Now we'll take a look at D-Wave. So the D-Wave is on the D-Wave down wave 1 and the D-Wave up wave A. And that will print if there's a low lower than this low for today at 4015.55. And the 1A wave is considered the distribution phase of the wave process, especially the A. So the up wave A and down wave 1 to print will get successively higher after today. So for tomorrow, Thursday, get lower than 4020.85 and the A1 will print. Friday, get lower than 4037.20 and the D wave will print A1. And then the Monday, get a tick lower than 4142.44 and the D wave will print there. So this could be a very shallow distribution phase where the A up prints very close to the up 5 for D wave here. Could be up here, around here, anywhere. I don't think it's going to go that far down. And ideally, in the perfect world, we do not want that down wave 1 and up wave A to print. We'd rather have the C5 shift over by ticking higher than this high back on the second, 4195.44. And if it just keeps doing that, then price can stay away from printing that down wave 1 and up wave A. And then again, during the free money era, right after the COVID crash up to 2022, and actually a little bit before the crash, the C5 started traveling onwards and upwards all the way. So this was consistently shifting over as there were new highs every other day. Every day there was a new high, just new highs constantly. And the A1 did not print. C5 just kept going and going and going. And that went on for a couple of years for sure. And we're not going to get that until we are in another quantitative easing program from the Fed. So eventually that 1A is going to print sooner rather than later. We're going to take a look at the dollar and gold relationship, starting with the dollar. Starting with the dollar diffusion indicator from Martin Pring down here in the bottom window. And I would like to know what's going to happen to the dollar in the immediate future. And I've been saying that the dollar shouldn't have too much of a run to the upside. And I would like to have more in-depth confirmation of that, but I've been staring at this and wondering, how am I going to go about this? And we know that the dollar shorts are on and have been since up here, 115 or so. And there's a new Bank of Japan chairman, or Powell's counterpart over there in Japan. So the yen could have some bearing on where the dollar goes, but we don't know what his plan is going to be. Rumor has it that it's going to be a rate hike over there. And quite honestly, it's been so many decades since that has happened over there. I don't know what the ramifications for the yen would be. Common sense would tell you that the yen should strengthen, which means the dollar would weaken. And that's far off into the future anyway. So then I've been looking at these areas down here with the dips where it goes down, comes up, changes its mind, either goes sideways, goes back down. One here, there's another one over here, these mumbling areas here, another one here. And this one shows that it went down a little bit, but then it was off to the races back in 14 all the way into 15. So that's not a good one to use, although some of them you could see that have these big dips like this and then come back down and then go up. They go up for a little while, then they come down, and there's another one over here. Go up for a little while, come back down. But then I started looking at this failure here in dashed green, where the dollar diffusion indicator was going up and the dollar was going down. And that's opposite of the way the diffusion indicator works, so that's a fail, and it got a dashed green line. And then I noticed there's one over here in this 2017 area, and it almost looks like a similar downtrend. And this one started in April, And this one had a dip down here around in the same area right here where it went up a little and then continued down. And you could see clearly in pink shaded area that this was a 1-year bear market for the dollar. So this failure dashed line here happened in April, and this dip down here was about in September, so that was about 4 months. And it's been about 4 months since this one, beginning of October to current day, about 4 months. And you can see over here the dollar ran up a couple of dollars here, 92 to about 94 or so, and then it continued on its downward trek here. So I just put the solid green line with the arrowhead here, as it has just crossed above its signal line recently within the past week. And that was right around 103.10. So that falls in line with what I was thinking, that it would be up to the 104 to 105 range that the dollar would go. And here's that US dollar daily chart that shows that range. It still is having a hard time closing above the 103.42 horizontal line here. It did once recently, well, maybe back here a little, but that was sure a lot of days where it just couldn't lift itself over that 103.42 area and close there, and let alone start moving up. So I believe the signal for that here is if the dollar can close above 103.42 and the next day stay in there and start moving up, and that would be a really good indication of that thesis for 104, 105 area up here. And that was a couple of dollars back in that 2017 era. So yeah, right around 105 I'll be aiming for. So what does that mean for gold? So here's the gold spider ETF GLD with just the wave showing. That's DeMark's D wave. And you can see that the D wave, up wave 3 that it is on currently, is not going to print until it ticks higher than this high back on August 6th, 2020. So everybody's waiting for that and beyond. But for the current time frame, we have to focus on the down wave. So gold is on the D wave, down wave B here. And it actually shifted over today with a lower low. It actually started right up here, right after the down wave A printed. And since the QQE fast is under 50 and the slow is pretty much right there too, we'll pay more attention to the down wave than we will the up wave right now. And the GLD ETF printed the combo and sequential by setup 9 end count perfected. And the last time it did that was over here on October 19th, 2022. And there was no buy setup countdown after that, meaning off to 13 like it was up here. So gold has more of a tendency to go up than down. They come in and buy the dips as soon as they can. And gold price did close above this qualified supply line now, 172.42, close of 172.61. So that's qualified. Let's see if there's an open higher than this close, and then a tick higher than this high, and then close above this close for the 15th end of day
If all that happens, then there's actually a qualified and confirmed supply line here. And it really dodged a bullet today. Gold did, this GLD ETF, as this momentum down for propulsion 50% and 100% was on its way to getting qualified, and then there was an uptick at the end. So you can see here, I'll zoom in a little bit, there was a down close on the 9th, followed by an up close on the 10th, followed by a down close below the level in question, this propulsion momentum down for both 50 and 100%. And then today it opened lower than this close, ticked lower than this low, but then closed above the close here for the 13th, 172.48. And I'm sure that was because of the combo and sequential by setup 9 end count perfected being completed for today. So gold definitely has a few things going on good for it to the upside. Here's another one. Here's Tom Asprey's MACD histogram, and you can see that it has the slightest trajectory upwards here, and really all that is an indication of a pending crossover above its signal line eventually, but it's sort of like anticipating that. And then price for the same amount of bars has a downward trajectory, so I wouldn't run to the bank on that or mortgage the house on gold, but that's a good indication. And then price up here, 172.61, closed back above the 50 simple moving average in gold right here, and it nailed this trend line here that I have set at May 2022. Goes through this price tag here, right through these two candles right here, the open here and just about the close there, and then nailed it and bounced up a little bit. It was quite torturous though for today. So there's another one down here anchored in August 2022, and you can see this one goes just about through that price tag for sure, this one, and then this low here on this red candle, and that could be a target to the downside to buy more, I would say, especially if the dollar starts moving up towards that 105 area. And then right underneath there is the 38.2 Fibonacci retracement level at 169.82 or so. So this is a nice level for another buy, but I'm really looking for the dollar to hit 105 or high 104 or 5 or something in that zone right there. And since the gold is in a D wave, down wave B, it's in the down wave, so we have to give that a chance here. And that would have to get under this low here on the November 3rd for this 2 to shift over where the B would come down. So that's really one heck of a drop there. I don't think by going to 105 that it would make it that low. So we'll monitor this area here around this second trend line here in red and the Fibonacci retracement at 38.2. The S&P 500 support and resistance levels big board chart shows the gray areas at the pivot point, daily conversion line, and disqualified by TDST.
And price in the pre-market hours for the S&P 500 at 5:55 a.m. Central Time is 41.20. And to the downside is S1, and then it's down into the 4,000 zone. Daily horizontal support, daily ongoing demand line, the 20 simple moving average, 21 EMA, and trend factor down 1. And to the upside is the top of the range here, and R1, the weekly 2018 broadening top and dashed red, this daily ongoing supply line, and the weekly high channel 3. And it won't take much for the NDXT lagging line or close, which is now at 69.09, to get above the NDXT up target downtrend line at 72.52. So it could go up and get above that, or it just could go sideways, and by virtue of this line declining, then the close will end up being above that line. And both the S&P 500 and NASDAQ 100 AD lines for the daily chart are above their 21 EMA signal lines respectively. And the New York traditional McClellan breath oscillator to get back to zero would require 1,361 advancers over decliners to get back to zero. Have a great day.